So hello and welcome to TMTConnect, the digital platform by TMT Finance, which brings together the leaders and investors most active within TMT M&A to discuss critical issues facing the sector, as well as deal and investment opportunities. In today's session, TMT Finance's Asia editor, Yeda Wang, is joined by someone who many of our audience will already know, Rangu Salgame, who is the chairman, CEO and co-founder of Princeton Digital Group, or PDG. So welcome to Yeda and to Rangu.
Thank you.
And today, in a wide-ranging session, Yeda and Rangu will discuss how PDG has scaled via acquisitions to become a key developer and operator of internet infrastructure in markets including India, China, Japan, Indonesia, and Singapore, and what opportunities there are for the next phase of growth. For those less familiar, PDG is a leading developer and operator of internet infrastructure in Asia, and backed by Warburg Pincus, Ontario Teachers, and more recently, Mubadala, which led a $500 million funding round into the company in February alongside existing investors. Rangu has over 25 years of experience in building and scaling technology businesses in Asia as well as globally. Prior to founding PDG, he led and transformed internet infrastructure and TMT businesses at Tata Communications, Cisco Systems, and Verizon Communications. He is widely recognized as a transformative growth leader and has been responsible for turning around business portfolios and converting them into high-performing growth assets through organic growth, investments, and M&A. So it's been a little over a year now since we last caught up with Rangu on this very same platform, and we're really excited to have him back here today to reflect on the past 12 months, hear what exciting opportunities are in the pipeline, and provide a wider market outlook. Also, we do encourage asking questions, so please use the Q&A tab at the bottom of the screen, and Yeda will do her best to put those to Rangu throughout. Okay, that's all from me for now. I'll remove my video, but will be on standby in case I'm needed. I hope you all enjoyed the session. Over to you, Yeda.
Many thanks, Tom. Welcome, Rangu. It's nice to see you again at TMTConnect session.
Thank you, Yeda, for having me. Good to see you. It's been a while.
Yeah, it's been a while. We last caught up in May 2021 and discussed PDG's growth plans. Another year has passed, and we've seen PDG continue its fast-paced growth in existing and new markets across Asia. Just earlier this month, PDG and Lendlease announced the commencement of construction of a 100 megawatts data center campus in Tokyo. That is a big facility. So let's start with your most recent achievement, Rangu. Could you please tell us a little bit more about the Japan facility and the wider context of a new market entry into Japan?
Sure. Thanks again, Yeda, for having me. And looking forward to the session, and thanks for the audience to having joined in. So as you pointed out, Japan has been our latest market entry, which we announced last year. And just stepping back, Japan, is one of the world's largest economies, third largest, in Asia. It is definitely a very important market from a growth perspective, and also an existing already a big cloud market, which in turn, drives a large data center market. And the growth ahead over the next 20 years or so is heavily driven by adoption of cloud amongst the Japanese enterprises, public sectors, and the continued growth of e-commerce, as well as consumer video, entertainment, gaming. So all key drivers of our industry are very attractive in Japan. And we had a very breakthrough entry into the market. And like most markets, Japan market has its own nuances about having the right entry strategy that lets you enter the market with the right approach. And we were able to do that last year, first when we announced about the project, which was to build a 100 megawatt data center campus outside Tokyo. And our approach was entering the market. There are a couple of things that was important for the Japan market. It's a market already at scale. So how do you enter a market which is at scale? And that's one important factor for us that we were considering about how to enter that market with scale. Second, how do you drive execution risk lower in a market that you're going to enter at scale? Any market, it matters, but particularly when we enter with scale. So keeping these two things in mind, we were able to come up with a model that we have been able to execute on, which is partnered with a company called Lendlease, which you pointed out, which is one of the world's largest developers. And the approach was they would develop the building for us on a BTS model, built to suit. And then PDG, does the investment for the capex and runs it as a PDG data center. And that approach gave us both things. One, they were able to, together with us, being able to bring a site which had the ability to build a large campus, 100 megawatt, with all the right characteristics, and then with the partnership that they could do the building for us, gave us ability to minimize our execution risk and a certainty of deal execution, project execution. So that's all it came together. Since we announced last year, Lendlease and our team, PDG, have been working together to get all the initial hurdles crossed, getting all the approvals, power approvals, quota, land zoning, all those issues. There's an existing building structures which had to be demolished. So everything got done. And as we kept to the promise of the start date, we started the construction in full swing last week. So that was how the project came about. It's one of the largest campuses at data center scale in Tokyo as well. And that gives us a huge runway in terms of how we are able to attract our customers to this location, which in itself is a very interesting location. It's in Saitama City, which is north of Tokyo. Some of the, over the last 8 years, most of the development happened on the eastern part of Tokyo, in the Inzai region or the Chiba prefecture. And there is a challenge about future power issues around there in terms of ability to scale in that market. So we have been able to find a place. Saitama City is very attractive for future growth of data centers. There are already a couple of them, and we have now entered with 100 megawatt, very good power availability, not just for today, but over the next 10 years. The upstream power scalability is very high for the region, not just for PDG, for other operators as well as our customers who understand that region very well, Saitama. So those are all come together, and very excited about this project in Japan, as you can imagine.
Yes, it's very exciting to see that there is you made such a big development and found yourself a quite very strong partner, Lendlease, to work on the project. And so with the Japan facility, if I remember correctly, so PDG has 20 data centers in 14 cities in 5 countries in Asia, right? So China, Japan, India, Indonesia, and Singapore. Some of the markets are quite large market for, So what are some of your other highlights for the milestone developments of the last 12 months, Rangu?
Thank you, Eda. You got a good tab on our business, so your numbers are right on. Better than I would have remembered, probably. So 20 data center projects, 11 are in operation, 9 in various stages of development. I think a lot has happened since we spoke last year on this forum. We had just announced at that time our market into India. We had started developing a 48 megawatt campus in Mumbai, and that is going extremely well. We have put some pictures out in the public domain. The construction is in full swing, and again on target in terms of delivery time, which is going to be Q4 of this year. The data center is going to be ready for service. So that's going extremely well. We've been fortunate to drive that execution as per plan. In China, we acquired, since we spoke last time, which is new to this forum, a pretty large project. We started off by acquisition, a project, and we are doing the construction now in full swing, is in Langfang, which is outside Beijing, a 66 megawatt project. We acquired the land and the power quota and so on, and then we started construction late last year, and it's in full swing, and it's coming RFS actually in Q4 as well. And so we have 2 very large projects coming to service later this year, both announced last year, one earlier in the year, and Langfang was acquisition later in Q4 of last year. So that adding over 100 megawatts, 110 number that added to our portfolio, that's coming to service later this year. And also we announced somewhere middle of last year, a new project in Jakarta in Indonesia, which is on existing campus land. We already have a JC1, and now we are building a greenfield 22 megawatt data center there that's just taking off construction now. So that's kind of the new 3 projects that have taken very good shape since we spoke last, and it's very exciting to bring them to market this year.
It's very impressive, and for Jakarta one, you had this strategic partnership with the Indonesian Internet Service Provider Association for that project, right?
Yeah, so it's a PDG a business. Yada, we acquired 5 data centers from a telecom company in Indonesia called XL Axiata, which was nearly 4 years ago, more than 3 years ago, and that's been our entry. So it's not a joint venture. It's it's a business that we bought from. They continue to have existing minority shareholding in the company, but it's a PDG run business, and we have been building the campus and serving the market there under PDG brand and our operating team there in the business. Yeah.
Yeah, it's very, very impressive. For you have achieved a lot of new data centers, and you've been busy doing expansion. And another impressive deed of PDG is that this February PDG raised another $500 million in a new funding round led by Mubadala. A belated congratulations, Rangu.
Thank you, Yara.
Yeah. It's very remarkable because given last year you did another big funding round led by Ontario teachers. So what's your plan for deploying the new capital? Do you have a priority for growth for the next 12 months, or are you going to focusing on existing markets, or do you have plans for new market entry?
Yeah. Thanks for observing that. It was a very important round. Bringing another blue chip investor like Mubadala gives us a tremendous ability to scale further. So our growth plans continue to be in the direction that we have discussed, which is deepen in the markets we're already in, the 5 markets, and we some examples like we talked about, the Langfang project or other projects we'll do in China, India, Japan. We just entered, though it's a very large project in Tokyo that we talked about, but just our market entry. We have a lot to do in Japan. So these are markets will continue to deepen. In India, we'll enter other cities like Chennai. So we will be expanding and deepening in these countries we're already in. And then, of course, enter new markets in Asia. We have talked about potentially looking at countries like Philippines, Korea, and we will action them when we find deals which are attractive from a strategic fit perspective. But at the same time, we have enough to invest in the markets we are in already at the same time. As you know, our approach to growing is we do greenfield projects, we do acquisitions. So we're always keeping eye for good acquisitions. So when we can make them, we do. Again, that acquisition targets will fit our strategy well. So the capital that we raised in this round, led by Mubadala and our existing investors came as well in that round, gives us a tremendous platform. 3 of the blue chip investors in the world having their confidence in our strategy and our ability to execute gives a confidence to our customers, which is the most important kind of testament in raising this kind of scale of round right on the heels of last year's round, which you mentioned, led by teachers, is our customers get the confidence that PDG has the right kind of investors, it has the right strategy, it's executing to that, and the kind of capital that really believes in building long-term business. And that for customers is extremely important, and more given the market conditions and challenges that we are saying, the customers' investment in co-location providers that they buy capacity from is very important to make sure these companies are going to be around for long term. And these are companies which are deep, well capitalized, have deep investors who are there for long term, and that's the confidence that this round has given further to our customers, and that is a benefit that gets us the ability to give more business with our customers. So it's a very strong kind of a ripple effect that this round is giving to us.
That's really assuring, Rangu. And before we move to the next topic, talking about your expansion plans and some of the opportunities in the markets. So this is a kind of reminder to our audience that if you have questions for Rangu, this is a good opportunity to raise up them to him. So please use the Q&A tab at the bottom of the screen. So we'll try to put those questions throughout the session. So Rangu, you mentioned about the expansion to new markets, and you just mentioned like South Korea or Philippines, and you also mentioned about your investment strategy. So we know that PDG has a unique investment strategy called the three-pronged investment strategy approach. For our audience reference, that means telco carve-out, greenfield data centers, and acquisition approach. So what are your plans of executing this three-pronged investment strategy in terms of entering these two new markets or any other, deepening in the new markets like Japan, India, like you said?
Sure. Yeah, I think from our three-pronged approach, the most important thing is, if you look at where we are today, over the last 4 years or so, a little over 4 years since we got founded, we've been able to scale dramatically fast. In this industry, in data center industry, to scale fast is a very hard problem, and particularly to scale fast in multiple countries is even a harder problem. And that approach that we started off on was very unique to PDG, and we were able to capitalize on our ability to execute on the strategy and build scale in a short period of time, and in 5 countries, and details that you pointed out earlier. And that has given us an incredible leading position in the market. So we have emerged in the eyes of our customers that we are the pan-Asia data center operator, which operates under a single brand of PDG in the markets we are in. They get a consistent quality of service across all our markets. They get ability to do deals across different cities, across different countries with PDG. So that leadership position that we've been able to attain now gives us an ability to continue on those investment strategies. But we have now a platform that we can execute this three-pronged approach where we think it's a good fit. We have got the market entries. Now it's about scaling. So we do greenfield, as we talked about, in Tokyo, in Mumbai. And I think that is giving us ability to execute compared to a new entrant to do a greenfield, but not have a platform scale, puts those companies at a disadvantage, while PDG can build a 100 megawatt data center in Tokyo, adding to the 500 megawatt that we have. So that is the kind of a flywheel effect that PDG has been able to garner. And that is helping our customers see PDG as the market leader and be able to do more business with us. So we are applying. We'll be looking for right acquisitions. Asia, number of acquisitions are relatively limited, and we are choosing what we do and have the right kind of partners that we can acquire from. So we can execute and deliver on the promise to our customers. That's very important for us. And so we'll do that as well as do carve-outs. We are in conversations, and we'll continue to be looking for the right ones that where we have the ability to control the outcome and do a PDG-led model in the eyes of our customers. So all three will continue to go. Each market is a little different. The 5 we are in already, and the new markets we'll look at and apply the techniques that would make us get good actionable deals that we can deliver to our promise.
Many thanks, Rangu. And since we just we touched a little bit on the your investment strategy, there is a question just coming in. I think probably it's appropriate to ask it here. So what do you think about the key drivers for data center M&As in Asia at the moment? What could impact data center operators' decisions on making a deal or not making a deal? Is the increasing multiple the key factor?
Yeah, I think if you look at a market where it is today from a year ago or 2 years ago, things are very different. And there are two areas that I'd like to point out to the audience here. One, there has been a discovery of Asia data centers. There's a lot of capital which is looking to deploy in Asia. Data centers are a great asset class, as the world knows, and Asia was an opportunity that many investment resources of capital are looking at Asia as an opportunity to invest. Now, the challenge is getting the right kind of team that you can back, as well as ability to execute. And that's a tough to do in a market where there has a lot of activity been in the last 4 or 5 years, like PDG and maybe others, but PDG has been able to carve out that leadership role, the position that we talked about. So from an M&A perspective, it is about who can execute and keep that gap in the market and the leadership in the market, that customers more and more want to do multi-country deals because their investment in Asia is going up. And so, from their perspective, they want a consistent quality set of operators that can work across multiple markets. So from an M&A perspective, it is about the right kind of assets, led by high-quality teams. Those are important factors. Now, the other part which has changed a lot in the last couple of years is the capital markets. Particularly in the last 3-4 months, we have seen tremendous volatility in the public markets. There are supply chain issues in the market coming out of COVID and other market pressures because of inflationary reasons. Now that puts a very different lens on how investors are going to look at acquisitions in M&A or how to build platforms, which is going to be very difficult for companies who don't have a strong balance sheet. When the demand side of the industry is not going to go away, cloud will continue to grow even in the most difficult times of the economic conditions. There is going to be reason for companies to reduce costs and move to cloud, which in turn is going to help operators like PDG and the data center industry. So the challenge is the companies who do not have an existing footing have a stronghold. It's very difficult to execute in this market condition because customers will be very wary to do business with companies who do not have a track record right now in the region. And in these conditions, it's difficult for customers to bet on new entrants. So companies who have a strong balance sheet, have strong track record of execution, are going to come out stronger out of this phase that we are in, from a global perspective as well as from an Asia market perspective.
Yes, I agree with you, Rangu. And as PDG, you have been around since 2017. And you have already built a good name in the market. As a company with operations in 14 cities and 5 countries, each market has its own opportunity and the challenges. Mm-hmm. So I think one of the market we hear about more is China market, and we have seen that a lot of some overseas listed mainland Chinese data center operators have experienced a fall in the share price over the last 12 months. And so how does PDG, you have 6 data centers in China, so you have exposure there, and what's your approach to this challenge, or are there any reasons to be optimistic?
Yeah, I think if you look at PDG, the big difference in PDG compared to some others that you may be referring to is we are a very well-diversified pan-Asia company. So China is an extremely important market. The data center growth potential in China continues to be very exciting. But at the same time, a company like PDG, we are in 5 countries, 3 of the largest economies that we talked about: China, Japan, India. So our portfolio is very well diversified. So capital is now looking to be getting a broader Asia exposure rather than only China exposure or only Southeast Asia exposure. So PDG is that way very well positioned because of a diversified portfolio. And that diversification, kind of a broad approach, did not come as an afterthought. It was from day one, as we discussed. So from day one, our vision was to build a pan-Asia company. So we built with a vision, the quality of leadership, the quality of how we design our data centers, how we execute, how we operate, how we serve our customers. Everything from day one has been like a pan-Asia global standard company. And that is very different than a single country operation, where if that country has certain risk factors that come up, then the companies which serve only that market, definitely the capital behind that would have a much higher risk premium on that. So that's what you're seeing, and PDG, in fact, is in the little bit in the other direction, which is we are a broad Asia market platform company. If you believe in Asia across all these economies, I think PDG is extremely attractive from that perspective. It's not a pitch for PDG investment, but from a market strategy perspective, how investors are looking at getting a broader exposure than a country-specific exposure.
Many thanks, Rangu. And I think this is very helpful and insightful comments from you. And you're now backed by 3 strong international investors. and Warburg Pincus, Ontario Teachers Pension Plan, and the new investor Mubadala. What role will these three investors play in helping PDG continue to grow and develop?
These three are blue chip, as you pointed out, because of a lot of value, how they bring to their platforms, their companies, their portfolio. That tremendous value by having three of these investors who have deep operating investment experience in the sectors that matter a lot to PDG, which is TMT, real estate, and digital infrastructure. So if you look at it, all these three firms have tremendous experience in building companies, backing companies, doing M&A company in this space, and that intersection of these sectors is this unique capability that our investors bring. That, along with what the management brings, is a very powerful force, and that's really what gives us even further confidence of what we can do over the next 3 to 5 years in terms of our scale and what we want to achieve in this market. So that's kind of the three things in terms of the expertise, and the expertise of these sectors have unique characteristics. Real estate brings a tremendous level of depth about how to understand and deploy capital from a real estate aspect. And then you look at TMT, it's a very technology-driven understanding of growth and capital, how to look at that perspective. So those nuances and bringing that together is the powerful combination that we've been able to assemble with our three investors and the leadership team.
Since you have expansion plans, do you have any plan for raising more capital?
We are very well capitalized. We did a $500 million equity round earlier this year. We also raised some debt at the project level. We are still extremely lightly leveraged. It's at the project level that we've shared in China, in Singapore, and Indonesia as well. So overall, extremely strong balance sheet. But at the same time, we have three deep investors. So we always will keep an eye to see when it is good to raise more money from external investors, and continue to expand and execute on the strategy. Which the position, fortunately, we are in. Capital is the least of our problems. So I think we'll be able to raise when we think we would need it comfortably outside our existing investors if we need to do that. And of course, there are public markets and other avenues as well when we need to tap that avenue as well. So I think our focus right now is a very exciting place we are in to capitalize the position we have in the market, consolidate our position as a market leader, drive further scaling, and give more scale to our customers. Really, that's really our focus. And given the challenges of headwinds that the industry is facing, we talked about, that actually gives a lot more strength for PDG and gives us even more room to consolidate our leadership position in the market. I think so. All focus is on gaining more growth and scale.
Yep. And Rangu, talking about your growth, I think there are some more questions from the audience asking about hyperscale data centers. So one is from Catherine Seeger. Do you see more hyperscale data center or co-location data centers in Asia? Is there a trend for one of them in the future? And then I combine this with another question. What is the risk of hyperscale is self-built in your markets? What's your insights for this?
I think both aspects. One, the overall demand for hyperscale in Asia is going to continue to grow. I think we talked about, everybody knows, the scale of the population here, the economic scale of regions, China, Japan, India, Korea, Indonesia. These are markets. All indicators lead to over 20% growth of our sector year over year over the next 10 years, and CAGR-wise. And that's a very, very exciting market. The market is already, from a data center perspective, is bigger than North America. So bigger than North America, and it's going to grow faster than North America. And North America itself is growing very well still, in spite of a large scale it is on as a base. So from a scale growth perspective and the potential for hyperscalers, their business to grow in Asia continues to grow at a tremendous clip, and that will continue for the next 5-10 years. So that would require more data centers. More new technologies like 5G is going to be deployed in this market. Things like IoT and other new technologies that consumers, businesses are going to be deploying. I think the demand for data centers is going to continue to accelerate in this region. And that kind of data center scale are hyperscale. So the interesting thing is the enterprises in Asia, many of them are leapfrogging the technology from going into cloud. While unlike in the developed markets where there was a lot of in-source IT, which had to migrate to third-party colo or cloud or colo, while in Asia, a lot of this growth of enterprises are moving directly to cloud. So there's that impetus in terms of the cloud and the hyperscale demand in Asia. Secondly, from the second part of the question, or the second question was self-built by these hyperscalers, the large internet companies. That is not a risk for third-party operators. In fact, it has always been a trend, even in the US, a developed market, where there has been a very strong equilibrium that has arrived over the last 10 years between self-built and third-party data center operators. And that biggest of the big companies in the US, they have a large, whether 60, 70% of their capacity is in-house built, and whether it's 20, 30% they buy from third-party data center operators, and that 20, 30% they buy from third-party is already a $20+ billion market, which is growing in double digits still. And now you take that to Asia. In Asia, the self-build is a very small percentage of the total data center market by the hyperscalers. So even if they start expanding more, which they will, they should, and we are very happy to see that happen. But the third-party data center market is still at a very high percentage, and that will continue to grow in the scale that we talked about earlier. But particularly in Asia, unlike the US and Western Europe, there is a lot of challenges in doing self-build. And so the attractiveness for hyperscalers to go to third-party operators is even more in Asia than in the US or Europe. Because of the challenges of getting things done in many of these countries, each country is different. Within a country, cities are very different. And those nuances and getting the execution challenge minimized by the hyperscalers, it's much easier to allocate that risk to a data center operator like us. And we do a lot of work to get those risks minimized and be able to deliver them capacity at the time and the place they need. And so that, we believe, again, is a component that will make the third-party data center operator business in Asia continue to be a much larger percentage than we have seen in other markets. And so the overall growth is going to be even bigger than that in a stable market equilibrium that we are seeing in the US.
And here is a follow-up question, Rangu, and probably kind of touching a little bit for the client base. Are there any industries in terms of clients that stand out as the main driving force for cloud and data center demand in Asia?
We, from a data center market perspective, PDG is focused on hyperscalers, so we're a hyperscale-led kind of business. So that largely are cloud companies, but they're also e-commerce companies, consumer entertainment companies like video streaming or consumer video entertainment. Very large market of gaming is there in Asia. As a large gaming market which continues to grow at a very healthy pace. So those are the drivers for our business: cloud, commerce, content, what we call it. And now for their drivers, those sectors drivers are different. Cloud companies are growing. I'm not an expert on their industry, but from a macro perspective, cloud business is growing because enterprises and public companies, government organizations, public sector companies, enterprises are adopting cloud, in a significant way in Asia. So that will continue to drive cloud adoption. IT moving from either in-source or new IT deployment happening in the cloud. So that's what it's driving, and that comes from all sectors, whether it's financial services, whether they're manufacturing companies, public sector companies that we talked about, and even telecom companies who are moving a lot of their infrastructure, operating systems, operation support systems over to the cloud. So those are factors which are driving the cloud growth in this region, and which in turn drives our growth, our sector, data center sector growth. And of course, we talked about content and commerce as well, which is heavily led by consumer side of the world. So
many thanks, Rangu, and I hope that the audience found your answers very satisfying. And then, since we talk about the clients, one of the next topic we want to touch is ESG, which has become one of the key topics for data center operators. So, Rangu, what is your sustainability approach in terms of growing the business, and has your hyperscaler clients' requirement for ESG changed over the last 2 years? And how has PDG adapted to the change?
Yeah, I think the S part of the ESG, E of the ESG, which is environment or sustainability, is the most important factor for our industry. From a customer's perspective, as well as from an investor's perspective, as well as what management and our employees believe in. So those factors necessarily haven't changed from a customer's expectation perspective. But definitely from an Asia market perspective, they are expecting data center operators here to operate at global standards in terms of making commitments to sustainability goals. That's very important. The roadmap and being able to deliver to the promise is very important. I think that's what customers are expecting. Operators like PDG in this region and others is, what's your roadmap? What's your commitment? What are your execution targets? And how are you measuring against those commitments? I think that's very important. And each of those countries in this region are very different. And they understand that. And they want to work with operators to make sure that we are taking a leadership position in these individual markets based on the context of that market. So that's very important, making sure we have teams on the ground which understand the dynamics of whether it's acquiring green power or whether it's kind of working with partners to do the right things in terms of bringing efficiency into the data centers. Certifications and those kind of things are extremely important in each of the markets, and we are driving a kind of a approach which is on the group platform level. It's a global driven strategy framework. We announced a sustainability strategy about 3 months ago or 2.5 months ago. It's in public domain, and it was the first report we launched, first report by PDG, and the second. So that one is the platform group level have a global approach to how we do things, and then complement that by very localized execution. And that's what PDG is doing in our approach to sustainability. The second thing is, from our perspective, sustainability is an opportunity. It's not something that we see as a problem. And if you kind of change your mindset and looking at this, I think it gives you a whole different perspective and opportunity to drive the strategy, rather than trying to think it as a problem and be apologetic in fixing it. Because it is not about that. It is about our data center industry has essentially shifted carbon emission from the physical world to the digital world. And now it's an opportunity for us to improve it for the global good in terms of driving strategies and working with our customers and learning from them. Because all our customers, our hyperscale customers, are absolutely market leaders from a global world perspective in their targets and what they're doing as companies. And they give us a lot of room to learn from them. I think having, again, a good execution track record, being credible in the market with our customers, we get a seat at the table with them to learn from them and be able to adapt that to our own success and execution.
And talking about the ESG goals, are there ESG goals tied to data center operators when they tap to the capital markets?
Yeah, they're not conditions necessarily, but and a point that you're making is important, which is there is tremendous interest in the capital markets, public and private as well. But in public markets, for example, to drive more sustainable driven investment in sustainable driven companies, and that is driving a lot of new products from the capital markets. The data center industry is now figuring out how to capitalize and learn from that and use those tools. For example, green bonds. Green bonds have been quite successful in the US and Europe, and is coming to Asia now. And we see that as a big opportunity, which does two things. One, it gives a moral and a financial commitment for us as companies that if we sign up to get a green bond financing, then we commit to those measures that we the measures that we commit to, we keep to that promise. And that gives a further impetus to make sure we execute our strategies well when it comes to sustainability. And that drives the cost of financing also lower, because some of the green bonds are at a much lower cost than normal financing. So that's an example where capital markets are in fact incentivizing data center industry to adopt these new products that are coming to market and coming at scale now. I think that's really exciting. And there are other things that are investors are expecting companies to adopt, sustainability goals, how we work with our own suppliers, and how we take kind of leadership position in these markets that we operate in.
And since we're talking about ESG, there is another question regarding the innovative technologies relating to ESG from one of the audience, Hill Perez. So related to ESG, what do you think of the innovative technologies for cooling, like immersion cooling, floating data centers, or even submarine? Do you have a target efficiency ratio, PUE, for any of your new developments? Rangu, any insights for this question?
Yeah, so from an innovation perspective, there are two sides of innovation that we look at. One is efficiency, and the other is green technologies, for example. How do we be able to do more things from green power acquisition? How do we look at technologies that are bringing in improvement in storage, for example, power storage, energy storage. These are some areas that there are some breakthrough technologies that are coming to market. And PDG is working and looking at technologies that we can adopt into our infrastructure that gives an ability for us to do better with acquisition of green power and being able to use it effectively in our data centers. And the second part is the efficiency, which is focus a lot in terms of internal improvement of efficiency. Our data centers, the third-party data center market typically is in metropolitan areas, so it does not necessarily lend into going to the Arctic zones or undersea cable as much. But there's a lot to be done within our data centers, even on the terrestrial data centers, in improving our PUE. So that comes. One is the technologies that bring in, that comes from companies which provide chillers and backup systems and so on, UPS systems and other technologies that go in. But it's really about the design of those data centers, where how you bring these technologies, cooling and other HVAC systems, that you can improve your efficiency. So that we have a design competency group here in our Singapore headquarters that is driving a lot of innovation in terms of a design. And that's really kind of some of the capabilities that are proprietary to us, that helps us to drive our PUE efficiency improvement and other things in terms of getting the right kind of certifications that our customers value, or commitment in terms of how we are driving the improvement efficiency. So that's an area of innovation that's around design and how we execute on that design.
Thanks very much, Rangu, for your insights on the solutions and for ESG. And so here we have a couple of questions regarding the inflation. So yeah, the inflation in the data center supply chain is one of the issue has been disrupting for the data center operators. So do you think this would impact the margin of data center operators in general, or data center operators have to increase their pricings for clients? What's your response to this issue, Rangu?
I think from a near-term perspective, I think data centers companies have to figure out how to manage the inflationary pressures. I think from our perspective, we've been able to, we're fortunate to be able to manage that for a couple of reasons. One, we embarked on many of these projects very earlier in the inflationary pressure, supply chain cycle pressure that started in the kind of early days of COVID, and we made supply chain commitments, product commitments with our vendors and suppliers, with a promise on our projects. The kind of projects we talked about, the Mumbai, the Langfang, even the Shanghai one, which we delivered 18 months ago. And we made the vendors were very cooperative with us to give us much more room to make forward calls and make commitments. And we were able to execute on the project. And that gives the confidence in the suppliers that here's a company which keeps its promise, pays its bills on time, that gives an ability to do much better when it comes to working with vendors on timeline, on in terms of delivery time, in terms of cost as well, in terms of what we can do a lot more proactively and take forward calls on our vendors, with our vendors. And that has helped us, and we are extremely well positioned in terms of all the projects that are in flight, as I call it. And that again is kind of a flywheel effect. The better you do, the better you are with your suppliers. The better you are with your suppliers, you are much better in the queue with the suppliers. And I think that gives an ability for us to do better even in our new projects. And for the new projects, we are going to look at what it means to not just focus on cost increase, but we have to be smart about our design and how we execute on our projects, and make sure that we minimize the pain on our customers. And that's kind of part of what we will do in our next phase of projects. And we'll look for ways to look at the total cost of project and be able to kind of drive that with a much leaner approach to capital and how we deploy the capital in this project. So we're going to work through in the next few months to try to manage that for the next wave of projects, which is going to be over the next couple of years. So it's so we have been fortunate in the cycle of the supply chain inflationary pressures that we didn't get caught on the wrong side, and at the same time we executed some things that is helping us do better.
That's very good news, Rangu. And you always put your clients at heart, come first as well. So let's talk about Asian market dynamics. We have seen more new data center platforms being established in Asia. Meanwhile, some of the large American and European data center players entered the region in the last 12 months as well. And some of the existing and emerged data center operators are also trying to grow business similar to your three-pronged investment strategy: data center carve-outs, greenfield, and especially M&As. How has your investment strategy adapted to the busy industry where more players are coming in? And what are PDG's USPs in terms of customer acquisition, competition for acquisition targets, or partnership opportunities? Rangu.
So I think if you look at PDG's journey, we started less than 5 years ago, and we started with a very clear vision of building a pan-Asia business, and not from one country growing to multiple countries, and that gave and we had a three-pronged approach that you mentioned earlier, and had the capabilities to execute on that strategy. And fast forward 4 years. Now we have 20 projects. We talked about all that, 600 megawatts. We applied a three-pronged approach very successfully, execute against that, and that has given us an absolute market leadership position. And that 600 megawatt, the portfolio, the scale, gives a lot more confidence for customers to work with companies who have been able to execute against that. So, from a PDG perspective, if you look at that, the approach of our investment and the scaling and the lead that we have in the market gives us an ability to now be execute on the same three-prong, but now we have the opportunity to do the thing that gives us to scale fast. And we talked about, for example, in Tokyo. And in Tokyo, we had to find a way to enter with scale. And we did that with 100 megawatt as a greenfield project and have the right kind of business model to execute on that strategy. So we are applying that. And where we can find an acquisition, we'll do that. But we didn't have to for a new entrant getting into a market at 100 megawatt without having an existing scale, right? And tailwinds in your favor. It's very difficult to do that. And that's where execution challenges come in. That's where strategic implications from a customer's perspective come into play. And customers giving confidence in what you're able to execute on the ground. And so all those factors is what customers are watching. And companies which have the ability to do that, of course, it's not a market that winner takes all. Data center industry always has a few top players in every market, but it's also not a market which can have too many players. So I think it's all about execution, having the scale and having the confidence for the customers that when a company says it can enter a market, it can enter with scale and not just enter a market and no roadmap for growth. And that's very important. So I think now we are in 5 countries where we have full roadmap for growth, and we're executing on that. So I think it's again a fortunate position to be in. And we were the first in the market to create the Pan Asia 3-pronged investment approach, as you know well, for a little over 4 years ago. And that leading market entry approach we took, and the kind of execution, the kind of capital we have, and where we are today, I think gives us a strong leadership position in the market.
And we think that are we expecting to see more and more expansions of PDG in the next 12 months?
Yeah, I hope so, but don't hold that against me, all the details. But no, it is, as you've seen, it's a market that is very exciting. Hyperscalers continue to invest and grow in Asia. That in turn drives our data center industry opportunity. So you will see us deepen in all the markets we are in quite aggressively. And as we give examples like Langfang in China, JC2 or Jakarta new data center, these are very strong signals of our commitment to deepen in the markets we are in. And you'll see that our aspirations are pretty big, and ambition is big, and we'll execute in this market quite aggressively, including Japan.
Yeah, including Japan. And we learned that PDG will be an IPO ready prospect by end of this year. Any comment on that, Rangu? Any plans for the listing, or if IPO is not your priority, what would be your vision for PDG in the next 12 months?
I think our view, as we touched on a little bit earlier, we are extremely well capitalized. We raised capital at a good time, and very deep, extremely reputed firms. So we are in a good spot to execute our growth strategy. I think we'll always, we're on a good trajectory to be a public company, but there's no urgency to go public. I think we'll do that when we think we are ready for public shareholders. To be shareholders of this company and drive the future growth, but all decks are in terms of focus on execution and the opportunity that lies ahead of us. So when we are ready, you'll get a call from me. So
that's for sure, Rangu. And how is your vision, and what do you see PDG to achieve? Where is it go for the next 12 months?
I think to be a continued partner for our customers as a multi-country operator, and give them solutions, which is essentially capacity at the time and the place where they want. I think more and more bigger scale. I think that's the confidence customers have placed in us, and we want to continue to deliver to the promise. So that's next 12, 24, 36 months. I think that's kind of continued focus for us.
Thank you very much, Rangu. And I'm sure we'll be reading more and more exciting news about PDG next year. And we're looking forward to seeing more successes of PDG. Thank you so much, Rangu, for sharing.
Thank you so much, Yeda. As always, good to talk to you, and thanks for having me on the show.
Yeah, same here. I'm sure that our audience, just like me, found the discussions with you most insightful. Now, let's bring back Tom to conclude the session. Over to you, Tom.
Great, thanks so much, Yeda. Well, that wraps us up for today. And as ever, a really fascinating discussion there. I'm certain that if we're back here in a year's time, we'll be talking about even more growth for PDG. So thank you, first and foremost, to Rangu for sharing your expertise today, and to Yeda, of course, for moderating. As we're all seeing, there's such a rich ecosystem in global digital infrastructure, particularly data centers at the moment. And obviously, PDG is such a pioneer in Asia with a really smart approach to growth. So we'll always keep an eye out there. You can also catch Rangu in person at the TMT M&A Forum USA, which is taking place in New York on September 28th later this year. So please go to tmtfinance.com/USA for more information. As for today's conversation, we'll be making this recording available to our TMTConnect subscribers at the beginning of next week. So please keep an eye out for that in case you've missed some of it. And you can also view the upcoming agenda and sign up for future sessions online at tmtfinance.com/TMTConnect. But with that, I wish you all a lovely rest of your day. We look forward to seeing you again soon. So bye for now. Thanks.